Fine. So there are two companies are operating in the same industry and they are not experiencing in any rapid growth, but providing a steady stream of earnings. R Limited management is interested in acquisition of S Limited. Okay. R Limited is interested, or we can say their management is interested in acquisition of S Limited due to its excess plant capacity. So there are two firms are there, which is R Limited and one is S Limited. The shares of S Limited is trading at 3.20 each. So the shares of S Limited is trading at the current price of rupees how much? 3.20 each. In the market, the price of the shares is 3.20 each. Other data relating to S Limited, they given here. Okay. So now just give me an answer in the chat box. Which is target and which is buying? Acquiring companies, which one? And target companies, which one? Can you give me an answer in the chat box? So there are two firms are there. One is R and one is S. You have to tell me which is the buying company and which is the selling company here. Okay. Right. R Limited is acquiring, or we can say buying company, and S Limited is the target firm, right? Fine. Perfect. Now, what are the informations they given in the balance sheet? Let us look at this one. Liabilities they given, current liability, long-term reserves, share capital they given 8,50,000 shares of 1.5 each. Assets they given, current asset, other asset, and PPE they given. PPE means property, plant, and equipment. And other apart from this balance sheet, because when a company is going to buy another company, very important is what is the financial position of that company. Based on the financial position is one of the parameter to buy the company, right? So I should know whether the company which I'm buying, how their balance sheet looks like. That is very important for me, right? So that is the reason they given here balance sheet of S Limited. Next information they given something called PAT, profit after tax, 86 lakh. S Limited also PAT they given, and combined entities PAT is given. Next, very important is your residual net cash flow per year they given. So now what is this residual net cash flow? Okay, this is very important. You try to understand here. When I say residual net cash flow per year, it's nothing but this is the cash flow which the company has been adjusted after the growth rate. Okay, which is adjusted, or we can say adjusted at a growth rate. Okay, so that is called residual net cash flow per year. Required rate of return is given. Okay, but required rate of return is nothing but year total weighted average cost of capital. For each companies they given back, they have already calculated 13.75 R Limited and S Limited is 13.05 and combined entity cost of capital is 12.5. Now, what is the information they given you to calculate this in this question? You are required to compute the following. What is the minimum price per share S Limited should accept from R Limited and maximum price per share R Limited should be willing to offer to S Limited? Okay. There is one more adjustment is there, which I have not written. While solving the question, I will tell you the third adjustment here, where you have to calculate the floor value per share. Okay. So the new concept I will teach you here, floor value per share, how to see it, that one. So now this question is now based on completely new, okay, informations and all. So here there is no growth rate is not given for each company. But one thing is given is that residual net cash flow per year is given and WACC is given. So now based on this, we can calculate individual entity what is the value. So if cash flows are given per year and required rate of return is given, we can calculate what is the value of business of R limited, S limited also, and what will be the value of combined entity, right? And later on, we'll calculate what is the benefit and all those things. And then we'll see what is the minimum price, maximum price per share will be given among each other. Okay. So the question is, once again, it's a case study problem. Okay. Let us see how to solve or how to calculate the values over here based on this information. Okay. So just let me start here. So question number 23, just give heading. Okay. Now let us start with the calculation one by one. So you have to calculate the value of the firm. Okay. Or we can say value of the business. So step number one is calculation of value of firm. Right. So under DCF, why? Because here you try to understand in the companies when you read the question, okay, there is no growth rate is not given in this company, okay, and other informations are not given, but they given something called residual net cash flow per year, which is nothing but free cash flows for the firm. So whenever we say residual, it's nothing but the another name is FCFF of this. So FCFF is given, WACC is given, we can easily calculate what is the value of business. So how to calculate? So since there is no growth rate, okay, let me write down here. Since there is no growth rate of the company, how to calculate value? If there is no growth rate given, the value of business, or we can say value of firm. So what is the value of firm will be FCFF divided by K. That's all is the, if there is no growth rate, if a growth rate is given, then you can take bracket 1 plus G, then divided by KE minus G or K minus G. Right? If there is no growth rate is given, then you can use this formula to calculate the value of the firm. So we have two business. So let us calculate the first one. What is the value of the firm based on the information? So we'll draw the table, 4 columns here. Particulars. First one is R limited, and then S limited, and then combined entity. Whatever the information is given, just as it is, you copy down those information and calculate the value of the business. So now the first one is FCFF. I need, as per the formula, if you see here, value of the firm, in case of there is no growth rate is given, then you have to use FCFF divided by K. So what is FCFF? I already told you, it is nothing but the residual value of cash flows. Okay, or we can say residual net cash flows. Those are called FCFF, right? After adjusting so many, and I have discussed the format also for FCFF. So now now the answer should come from your side, and let us calculate and tell us what is the R limited residual net cash flows. Can you see here? It is how much is they given in the question? The first company is 90 lakh 10,000 rupees. So I will just copy here 90 lakh, how much? 10,000. Next one is for S limited. What is the residual net cash flow per year? How much they have? 54 lakh 87,000 rupees. So just copy here 54 lakh 87,000 rupees. And next one, they given something called as combined entity. So if you combine both the firm is getting combined, then what is the value? Residual FCFF is 1 crore 85 lakhs. So that also we will write down here. 1 crore, how much? 85 lakh rupees. So FCFF you got. Next, what else we need here? The second information is nothing but the discount rate, right? Which is also called as K, cost of capital. So now, what is the discount rate? Can you see there is a required rate of return on equity is given, which is nothing but the cost of capital of the firm. So each company's what is the cost of capital they given separately. So based on that, we can calculate what is the value of the firm. So the first companies is 13.75. So I'll write here 13.75 percentage. What is the cost of capital of S Limited is 13.05. And what is the combined cost of capital of the firm is nothing but 12.5%. So can we calculate value of business, or we can say value of equity also? If it is not, debt is not given, that will become value of equity. So how to calculate 90 lakh 10,000 divided by 13.75 percentage? What is the value? Can you put your answer in the chat box? So how do we calculate? Just let me write on the formula here. Fcff divided by K. The first company's value is how much? So just divide the first one with second one and tell me what is the value of R Limited. Okay. 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 So it is coming how much? Some few people they have answered me in the chat box. 65 lakh 52,000.
So 6 crore 55 lakh to 27,672.
6 crore 55 lakh
27,000
273. Correct?
approx.
Okay. So just round it off to 72.7 to make it 273. Okay. What is the second form value? Just put in the chat box. Okay. Four crores. Is it 4 crores? 20 lakhs. 45,977. Combined entity, what is the value? Okay. ₹14 crores. 80 lakh rupees. Right. How many people got these three answer correctly? Raise your hand. How many people got this answer? VOB. Okay. So around 18 people, they got the correct answer, what it is required as per the calculation. Okay, 22 people, they have raised their hand. So 22 people, they got the correct answer. 23. Okay. Okay, 23. Fine. So done. Our one calculation is over. Now let us calculate now what is the benefit of this. What is the benefit formula? VAT. I hope you remember this formula. Minus bracket open VA plus VT. So now let us calculate the benefit of this merger. What is VAT? Value of combined entity, right? So if you take the value of combined entity, it is how much you're getting? 14 crores 80 lakh rupees, right? So let me write down here 14 crore 80 lakh rupees, then minus, then again put bracket. What is the value of A? A means the acquisition firm, acquiring firm. Who is acquiring to whom? R is acquiring to S. So what is the value of R? R value is 6 crore 55 lakh 27,273. Then minus T is target. Our target firm is S Limited 4 crore 20 lakh 45,977 rupees. So now let us calculate the calculation. Here it is 14 crore 80 lakh rupees. Can you tell me what will come in minus? What is the value here? Can you put your answer in the chat box quickly? We have to calculate what is the benefit of this arriving after this form. So 6 crore 55 lakh 27,273 minus 4 crore 20 lakhs 45,977. What is the value here?
Plus, sir.
Hello?
Sir, VA plus VT, no, sir?
Yes, yes, VA plus VT. What is the total value you're getting here? Just in between this bracket, whatever the total is there, you tell me that one. Okay, 107573250. Is it 1 crore somewhere?
So 10
10
crores,
crores.
75 lakh.
10 crores 75 lakhs. Okay. 73,250. Correct. Then what is the value?
Yes.
Just minus this one. Rupees 14 crores 80 lakh minus 10 crores 75 lakh 73,250. 4 crores 4 lakh 26,000. Okay, 750. How many people got this answer? 4 crores 4 lakh 26,750. Raise your hand. Okay, 19 people, they have got the answer. 20, 21, 25. Shiv Subramaniam, Shruti, Tejas, $27, $28, right. So now let us go with the case step by step. We'll calculate our calculation, what they're asking you to do. This is kind of a different problem completely from this. Now you see the minimum price per share we need to calculate here, right? Minimum price per share S limited target firm. They should accept from R limited. Now how to calculate now? All of you just concentrate here. In case of no growth rate, how do we accept this calculation? Just see here. So now based on this information, we have to calculate what is the minimum price per share they should accept S limited. Okay. So how to calculate pre-merger number of shares? But before that, pre-merger value we can calculate, right? Pre-merger value of S limited. We want to calculate, and number of shares of S limited. So now based on this, let us see, go to the question. Okay. What is the total value of this firm? Okay. Based on this, we have to calculate. So now what is the value of this firm? S limited is how much? 54 lakh 87, and the residual cash flows are given here. Now here we got the value, okay, of this firm. If you combined after discounting factor, okay, after weighted average cost of capital, you got the value of 4 crore 20 lakh 45,977. When we combine this, the total entity value is 14 crores 80 lakh. Okay. So when you are taking the value of S limited pre-merger, so what is the value of S limited here? If you want to take, it is 4 crores 20 lakh 45,977. I want to calculate price per share, minimum price per share divided by what are the number of shares of S limited. So just go to the question and check in the S limited balance sheet. If you see here, so what is the share capital they given? 1 crore 20 lakhs, but this is divided into separate. How does this 1 crore 20 lakhs? 80 lakhs they have shares of 1.5. So total number of shares of S limited is how much? 80 lakh rupees. 80 lakh shares. Sorry. So if we divide the total value of S limited, okay, and divide by number of shares of S limited, just I will write what is the value you are getting per share. Can you put your answer in the chat box? 4 crore 20 lakhs 45,977 divided by 80 lakhs. It is how much? 5.26. Right. Right. So if you divide that value, you will get the 5.26 per share. Another way we can calculate the value pre-merger, if this is after discounting, okay, this value of the firm is after taking into the cost of capital. If you want to calculate at a book value, so what you have to do, you have to compare discounting factor value with book value price. So pre-merger, we can write here book value per share. Okay. So how to calculate pre-merger book value per share? Basically, when we say book value, all of us know it is a net worth. Simple meaning of book value is net worth divided by what? N. N means number of shares. So how to calculate now this one? When you say pre-merger book value, according to book value method, what is the value per share? How to see? Just go to the balance sheet. Now already the S limited, we are calculating S limited. What is the value per share, right? They have 1 crore 20 lakh rupees of share capital, right? Book value method I'm adopting and calculating value per share. So 1 crore 20 lakh rupees is the total share capital. Now, when we say book value method, even you have to take something called as reserves and surplus also, right? When we say net worth of the company, you have to take both the value. So share capital 1 crore 20 lakh plus 2 crore 79 lakh 95,000. So just take that also. 2 crore 79 lakh. What is the reserves? 95,000. Add this one, and again you have to divide with the book value shares. Total share of the company is 80 lakh shares they having with them. So 80 lakh shares are available with this company. So just add and divide with 80 lakh. What is the price book value per share you are getting? Can you calculate the answer in the chat box and tell me? As per this book value method, how much you are getting the price? So when a company is acquiring, they should see to that add discounting factor. What is the value per share? Add book value. What is the value per share? 1 crore 20 lakhs plus 2 lakh 2 crore 79 lakh 95,000 divided by 80 lakhs. Can you post your answer in the chat box quickly and tell me what is the book value per share of this company? Okay. Okay. Just divide. What is the value? Hello? Sindhu, am I audible? Raghavendra, am I audible?
Sir, you are
Yes, sir.
audible, sir.
Yes, sir.
Okay. Just I want to know what is the answer. That is what I'm waiting in the chat box.
5, sir. 5 rupees.
5, sir.
5, right? That is what I'm asking. So you got 5, right? So as per book value per share, if you look at here, it is 5. And as per, if you calculate at discounted value, if you say the value of the per share is 5.2. But the first method, what they're telling here is that what is the minimum price per share S limited should accept from I. So what do you think? What price they should give R limited to S limited? 5.26 or 5? What price they should give?
5, sir.
Yes. You can put your answer in the chat box. What is the minimum price here? So minimum price is nothing but whichever is less. Always minimum is whichever is less. What is the whichever is less is how much it is they should accept at 5 per share. So this is the first case where we have solved the problems. Let us go to the now second one. Almost we finished the problem. Done. That's all is the case study problem. Okay. Few things. Next we have to calculate the maximum. price per share of R Limited should be willing to offer to S Limited. Okay. So now you see the maximum price, how to calculate. Remember one thing, cost for R is benefit for S. That is the logic in mergers. For one company, there will be a cost, but for another company, there is a benefit. So we can say this benefit is nothing but this is a synergy value effect, right? So that is we can say over here. So how to calculate, just all of you concentrate here. This is a new technique over here. First you take what is the value of S Limited, because we have to give them maximum price, how much we can give that, based on that we have to calculate. So again, if you look at the value of S Limited, it is how much? 4 crores 20 lakh 45,977. Then what is the value of benefit? You have to give that also, because S Limited will get the benefit. And what is the benefit value we have calculated here? 4 crores 4 lakhs 26,750 rupees. So what you would have to do is that calculate both the values total and just tell me how much it is coming. 4 crore 20 lakhs plus 4 crore 4 lakhs 26,000. What is the total value here? Just give me the answer in the chat box. What is the value you are getting here? 4 plus 4, it is nothing but how much? It is almost 8 crores rupees. Okay, I got some answer in the chat box. 8 crore 24 lakh 72,727 rupees. This is a value, the maximum value which is the company of S Limited is getting. Now based on this, what we have to do, we have to calculate the value per share. So what we have to do again here, with total number of shares. Okay. What is the total number of shares? There are 80 lakh shares are available. So we have to calculate now what can be the maximum price now. Maximum price per share. How do we calculate? Okay, this is the total value of the firm. Total value. Just divide this. Okay, it will come total value divided by total shares, right? So indirectly what I'm trying to do is that 8 crores 24 lakhs. Okay, let me write down for your understanding here. 72,727 divided by 80 lakhs. Right. So what is the maximum shares we can give them? Price per share. Maximum price per share is how much we can give them? Right. I got some answer here. 10.31. This is the maximum we can give them price. So minimum calculated, maximum also calculated. Okay, both the adjustments are completed. Now I told you I have one adjustment I have not written here. I have forgot to write down, but there is one more C adjustment. That C adjustment I will write down here. Okay, the C adjustment, for your understanding, the C adjustment I'm going to write down here. Just see here. There is something called as floor value, right? You must have studied in stock market something called IPO time floor value per share of S Limited. Okay, now what we have to calculate the floor value. Let us see, and full stop, whether it shall play any role in decision making Okay, see, this is how valuation done actually in the real concept. Whether it shall play any role, whether that floor value, whether it shall play any role in decision for its acquisitions by who is acquiring the company? R Limited. So now we have to write down one conclusion based on the C adjustment. If you take floor value per share as one of the parameter to acquire the firm, is it worth or not? That we have to calculate. So now the third step, as per the calculation, we have to calculate something called floor price of the shares. So how do we calculate floor price of the share? Look at here, everyone see on the screen, book value per share. So we have calculated book value per share, right? So what is the book value per share? We got how much rupees? Can you see here? As per book value method, we got what is the value? Can you put your answer in the chat box? As per book value per share, how much we got? Can you see here? It is how much? Whichever is less, we calculated book value is how much? Can you put your answer in the chat box? It is rupees. What is the book value per share? 5. Okay, right. Or MPS. Now MPS means what? The market price per. Can you tell me what is the market price per share of this company? What is the market price of this company? How do we get to know that one? Now can you see here? The shares of S Limited is trading. When we say trading, it is nothing but it is trading at a market price of rupees how much? 3.20, right? Can you put your answer in the chat? What is now? Can you see market price? Say yes or no.
Yes, sir.
So we got to know what is the market price also of this company. So these shares currently trading at a market price of 3.20, right? So what floor price says, when we say floor price calculations and all, we always have to take whichever is less. Whichever is less. When you take calculation of floor price, what is whichever is less means a book value, and then you have to compare market price when you do floor price calculation. Again, in this comparison, you have to take whichever is less. So what is whichever is less is which one? 3.20 among these two. So now what we can do, we can write one statement here. Finally, since the MP, what is MP or MPS? Market price per share is less than what? Book value per share, right? We can see market price is very less as compared to book value per share. Now you tell me, I will not write continue. Let me see who will answer this one. If the market price is less than book value per share, is it worth to buy this company? Say yes or no. Is it good to buy this company?
Yes, sir.
Yes, sir.
Can we buy? No, what is that? Yes. What is that? Yes, sir, meaning? Anybody can
Should buy,
unmute?
sir.
Sir, as it is undervalued, sir, it is the right time to buy the company.
It is right time to buy. Okay. Book value per share is 5. Market price is 2. So you can buy this company since the market price is 2, right? But for a company to take the decision making, okay, when you buy, okay, what is that? There may be some bad thing happening in the company, so that, yeah, that is also one reason. You know why when a company's market price is less than book value, what happens in the stock market? Do you know? It leads to what? There is one concept in stock market. If your shares is trading less than the book value, what do you call that one? What happened in the market companies?
Company may be liquidating, sir.
Company may liquidate. So all of you are seeing that you can see this company's book value per share is 5 rupees. So it is good using market price is 3.2. But when you decide that companies, there is something wrong. Don't you feel there is a wrong in this company? Say yes or no. Hello. Why market price
Yes,
should be
sir.
traded? You think practically. I will show you right now the Excel. Sorry, this one. One company is there, very famous company. This was the tragedy happened with them. So can anybody tell me when your shares are trading less than book value, what happens in the market? What it indicates? What SEBI will do? Anyone know?
Sir, delisting.
Okay. One
Sir,
second.
they add to some list, sir. From
One
that,
second.
they need to come back